Now, is the long view the best view? I have here the S&P 500, Dow, Nasdaq, DAX, Euro Stocks, China's 50 index, and the FTSE 100. Now, SeasonX is a tool that suits short, medium, and long-term traders. Now, trying to time the market is a significant challenge that even professional investors struggle with. So there are a couple of simple points that can help with those wanting a more passive style of investing, and SeasonX can help with that. So the simple point number one is that global indices over the long term tend to gain. You can see that over long periods of time that global indexes go from the left in the chart up to the right in the chart. That's a simple point, but it's really worth bearing in mind that over time stocks have gained significantly over the last 50, 100 years. Simple point number two, certain times of the year offer a statistical edge for global index investors. And those who invest in the winter months in global stocks tend to see outsized returns. So, for instance, here's a look at the Dow between 31st of October and the 1st of January. It tends to have a strong seasonal pattern. We can detrend it and see that that is a strong seasonal pattern tilted to the upside. Let's look at the same period and look at the German DAX. We can see that from that same period, from the end of October through to the end of December, again, a strong seasonal pattern. Let's also look at the FTSE, and you can see the UK FTSE again has a strong seasonal pattern. So you can see winter months tend to be better times, and particularly that, between the end of October through to the start of April in particular are strong. So the point I'm making is that SeasonX can be a tool that can really help identify strong seasonal patterns for those who want to be a more passive investor. Major trade risk. The main risk here, of course, is that previous seasonal patterns, although based on sound reasons, are not guaranteed to necessarily happen again in the future. Remember, don't just trade it, but SeasonX it.